Hello folks, welcome to Pro Trader Strategies Market Commentary for Monday, March the 15th, and I'm Eric Wilkinson. You very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, geopolitical environment, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm going to also talk about these option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. Also, for you folks out there, we have streamlined the process for you to find the optimal option strategy for any given assumption. We aren't just picking option strategies out of the hat here at Pro Trader Strategies. What we do is we have a finite process in order to follow this roadmap to find the best strategy. Sometimes it's buying a call for a bullish assumption, but sometimes it's selling a put like we did in Apple last week. So with that being said, let's get on with the economic data and see what's going on in the overall market. So across the pond, not really a whole lot going on because it is Monday. We didn't get anything coming out other than the German WPI coming in at 1.4%, expected to be 0.7%. So it's basically the price of goods sold by the wholesalers, which is something to see. That shows inflation, right? Then here in the United States, not really a whole lot. We do later on today have some long-term purchases, tips. It's going to be a bond auction, basically. And we got manufacturing sales out of Canada coming in at 3.1%, expected to be 2.8%. That's good to see. Here in the United States, we got Empire State Manufacturing. We've been seeing these numbers come out pretty good, and it's consistent. Today, coming in at 17.4, expected to be 14.6. So we're still seeing the strength in the manufacturing sector, which is very likely what we're seeing in the demand for crude oil. Remember, we've been seeing these distillates inventory go down. All right. So while we have seen some inventories of crude oil start to build, we are seeing the demand on the other side for the refined products. And a lot of that coming from the manufacturing sector, as well as the retailer with the gasoline. But the distillates is really what goes into the manufacturing process here in crude oil. We can see crude oil is off, though, by about $1 right now. Let's take a look at Bitcoin because it's taking up to new highs. The 60 handle is an all-time high here in Bitcoin. You can see overnight Sunday night into today, we've got that 61 print. We can probably break it down into the day session and see this breakdown. Maybe you need to get at let's show the highlight extended hours. There we go. You can see almost right off the open, we went up and printed that, did a double top there. No real attempt to try and rush up there for about another $5,000 upside as of today. Right now, it looks like a lot of people were taking profits overnight, and that market started selling off. So I would actually say that the overnight inventory was probably more short than long in that case, and no real attempt to flush out those longs. So that is pretty bearish. Gold futures we saw there, not really making any moves as the rest of the only thing that's really making the moves today is that Bitcoin. We can see gold pretty much unchanged. Yeah, it's up slightly, but still very quiet day there. Bonds trying to make a move here, up a half a point on the day after Friday's massive sell-off. We remember we were down a few points on Friday, continuing this whole cycle of lower highs, lower lows, and the market continuing to slide. It looks like 53 is something that's going to be tested here before we start making a rebound if we do. Then we look over at the VIX. The VIX is slightly higher, and you know, we got a real mixed bag at any given point. You can see Dow Jones unchanged, maybe even click into negative territory there after we saw a positive just a second ago. So markets really all over the place, toggling back and forth between unchanged for the most part. We can see the NASDAQ is off by 25 points. But again, NASDAQ's been making major moves of 100 point or 3-digit incremental moves as of lately. So a 25-point move in the NASDAQ could be easily erased or doubled in a matter of seconds. But one thing I did want to note here is that we are trending along these trend lines that we've set up since 2017, 2018, finding resistance on that upper band there. And that's going to be a pretty consistent theme, I think, with these two trend lines from back, 4 years ago or so. Those trend lines are very healthy trajectories that we've trajectories there that we found for NASDAQ. That seems to be following through. We've seen it bounce up against this, finding resistance there, and then once it gets above, finding support on those lines. So I'm leaving them in there because they are continuing to act in concert with a healthy trajectory there. All right, we've got the Dow Jones or E-mini S&Ps off by about 4 points, but again, when I started out this video, we were unchanged. So anything can be erased or made up in a matter of moments. At this point in time, you can see very quiet. Overnight, inventory very flat. You know, it got long, flushed out, got long, flushed out. Right now, I would say we're pretty flat on the day. Not an inside day. We are still accepting price higher at this level. You can see the point of control is even over Thursdays when we made that all-time high there. Inventory very long here over the course of the last week or so. So still bullish in these markets there. All right, so let's talk about a couple of things that I'm doing here. Home Depot, you guys remember I have on the spread here that I put on back in December, and it started out as the March. I bought the 210 calls in there, and I had sold the 285 calls, rolled those up several times, and I'm just now looking to cover this the 210 calls now, because I originally paid $56.65 for that. Lowered my overall cost basis, don't get me wrong, by over $5 on this trade. So my break even right now is somewhere around 260. We can see we're trading 277 right now. So making some nice moves. If I can get up in and around that 280-ish area is really where I'm looking. 285 is where I'm kind of targeting this trade to be able to exit on it. You can see that's just right up and around here. So with that said, I'm trying to get out of those 210 calls for $76.40 right now, and it is probably $10 away, folks. So not really that close. As you can see, I got about $10 to go to the upside before I'm even really getting close to that. But I wanted to put that in there. We're up, a couple of percent right now. We get up $10 on the day. That's going to start looking very enticing to cover that trade. So I'm just working in order right now. If we get a pop to the upside, I'm going to cover that trade. Also with UAL, I've got a working order to get out of this trade because you can see we're up almost 10% on the day. Reopening trade doing very well with a lot of these stocks today. We're talking about I think only 3% of the people getting the vaccine on the double dose schedule, only 3% of those people have missed that second dose. So that is very encouraging to places like Disney, United Airlines, where they really are talking and touting this idea that it's going to be the roaring 20s when we come out of this pandemic and everybody gets vaccinated, that people have cabin fever and are going to go kind of bonkers. And we'll have to see how that works. But UAL starting to make some moves to the upside based on that reopen aspect. And if you guys remember with this trade in United Airlines, I went into the June and bought the 65 calls in there for $3.35. Excuse me. With that being said, I am looking for a target of 65. We start trading up near that. Now, I don't think we're going to get there necessarily today, but at the end of the day, I want to be prepared for a pop in this market. So I would need about another $4 or $5 to the upside in order to be clipped on these. So I'm trying to get out right now for $8.35 on this trade. So right now I've doubled on the price. It's trading around $6.25 or something, but I need another move to the upside to get that. It's about a 50 delta, so another $2 or another $4 to the upside. I should be very close to be able to get out of those on that trade. Another $4 to the upside. So right when it's trading around 65, which is my strike, right? That's how we set these up. We set these up for a high probability of touch. Once we get touched on those, that's where I'm looking to cover this trade, especially on a long call and something like UAL. Looking for that strike to get touched. I'm not looking for it to go into the money necessarily. I'm just looking to beat the probabilities, and that's where we're going to try and get out of it. I priced in that move with the deltas, and that's how I came up with my pricing to get out there. All right, IBM also making a move to the upside. Now, if you guys remember on this one, I've been playing it back and forth. I'm long at 120. Those stock got put to me on in earnings. I've been lowering my overall cost basis on this trade. If you guys have been staying with this, I've lowered the overall cost basis at least by $5 here as well. And long IBM, like I said, at 120, lowered the overall cost basis on this trade significantly. And I'm looking to get out when my short calls get breached there, and that's at 130. So look to get that called away from me, right? We're doing covered call strategies in here, lowering that overall cost basis. If IBM gets called away from me, I'm going to look to start selling some puts. Continue that cycle of lowering cost basis, doing covered call strategies, trying to dollar cost average by buying it back in. I'll probably be looking right back at those 120 calls in order to get it back. 120 to 115 is kind of the sweet spot to get long in IBM, and then again start selling covered calls up there at around that 130. It hasn't gone anywhere, folks, for about 20 years, so I'm not too concerned about continuing to be able to play this game with IBM. So follow along with that. Also, we're coming up with a new course. Stay tuned. We're going to be building that out for you folks. So I'll be talking about that coming up here relatively shortly. All right. So that's all I got for you folks. Take a moment to go over our disclaimer. As we are an educational company, I'm not here to solicit you guys to buy or sell any of these strategies. What I'm trying to do is use my trading as an example for you folks to follow along with these rules that we have in order to trade these options. All right, so that's what's going to make you more successful, is following rules, staying mechanical, and paying attention to what I'm talking about with these different strategies, what makes them work and what is the wrong time and place to set them up. So please take a moment to go over this disclaimer. One other thing I wanted to talk about real quick before we do that, you guys will probably have to pause this, but I wanted to talk about this put or call skew in GME. I don't have the platform right now, but the call skew, you can see if we talk about this for equal distance away from where the underlying's trading at 72, we can see that these 80 calls are just out of the money and these are further, but we can see that the call skews are getting a lot of premium. We could even go like say $30 to the upside to the 300s and $30 to the downside. We can see that the pricing on those is significantly skewed towards the call side. So please take a moment to go over that, because this example of a call skew is probably one of the strongest skews to the call side I've ever seen. All right, so GameStop really got the bulls out there trying to push this higher. All right, that's all I got. Like I said, take a moment to go over the disclaimer, and if you can't take that, take it easy.